Hey, welcome everyone. Tom from Park Avenue Trading here. Please, if you like this video, like, subscribe. Don't forget to ring the bell so you don't miss any updates from me. What I'm going to be doing for you guys tonight is I'm going to be giving out trading levels for you guys to watch May 30th, 2024. It is 12:17 a.m. in the morning for me, so I'm going to make this video short, or as short as I can possibly make it, because I'm really verbose. Because I got to get back up at 5 and start this whole thing over again. Micro levels are basically important levels for the day that basically judge where, how strong a market is. So the first micro level that we have in sterling is right around 126.61. So what that means, if 126.61 breaks, most likely sterling is going to be heading lower, probably 50-60 points lower, maybe back to 126 the figure, maybe even 125.80. Now, the way I would handle something like that is I'd be focusing on this price level. If the marketplace was to come down to this price, I'd be gauging market momentum to see whether or not, I want to take this short. I would probably take it. If it broke the 126.61 level, I would be looking to get short. Now, I don't do it immediately. I try to wait for a little bit of a retrace. Sometimes you don't get them. So generally what I would do is, and maybe I put on half my position, I would use a 50-point stop on any one of these levels. So next level up top's 127.40. Sterling needs to get through 127.40 in order for it to show any type of strength. Now, it really has not been able to build up any type of momentum. I mean, we went to 128 the figure and everything stalled out, and we're right back down to right around 127. I really should be looking at like the commitment of traders reports to see what the commercials are doing. I haven't looked at that in a couple of weeks, or maybe 3 weeks. That's bad on my part. What you really want to be looking for is, what the commercials only are. Are they, they short sterling? And how you really gauge that is if there's a spike down and they're short and it's low volume on that short, and all of a sudden the next commitment of traders report comes out and there's a shift that they're not as short anymore, or they actually become kind of neutral, then there's a possibility that sterling is going to be able to gather steam and then break higher. So you're really looking for a volatility spike on low volume. It's a classic Wyckoff trade, spring, like a Wyckoff spring trade. So a break of 127.40 shows some strength. Obviously, the marketplace needs to get through what I call like an ice line or another horizontal right here. I call it the ice line because basically, if it breaks through, that's breaking through the ice, and potentially we have the break up above here. So if you broke 127.40, what I would be looking for is like a pullback, maybe 20 points. If I'm not getting that, and I'm seeing that that level's holding, I'm going to buy it, and I'm going to put a 50-point stop loss on it. Let's move over to good old sterling yen. It's what I've been trading the last couple of days. I was really a sterling yen bull, and I'll show you some trades. Hang on a second. Let me pull something up for you. As you can see, I legged into sterling yen. Now, legging in is a technique that bank traders use, and I'll describe that. I describe that to the people in the trading room so they understand exactly what it means. But basically, what I did was I got long sterling yen at 237 yesterday. Now, I was almost stopped out the 29th by like maybe 10 pips. I survived it by like 10 pips, and I came in the morning again. I saw it around 66, and right around the 70 level at 5:30 in the morning. I said, this thing is not, it's just not, it's not happening. So I immediately squared my sterling yen at 259. And I was thinking that if we got another dip down to the low, I did the low yesterday evening, it was 200.12. Right around 15, I would be looking to really get long again. And so I put that trade aside. I put that in the drawer. Then I went short sterling dollar because it was just a dog. It just didn't want to really move. I had a pretty big stop on it, but these are emergency stops. This is like I take the trade and something happens, so I get out. But immediately I ratchet these down. I don't really keep them as high as this. Generally, it's usually, well, this one would have really been like around 93, so not really much of a difference because I usually use 50 points. So immediately as the market started moving in my favor, I moved my stop down at 127.55. I PT'd, which basically means pyramid. I pyramided my trade times 1, so I doubled my trade at 127.215, and my stop loss was my average. Now, at this point, I was really expecting sterling to really crap out and break through 90, and I was like already counting my money, going, oh, it's going to go down like 126, 40, and that'll be a great trade for the day, but it wasn't in the cards. I mean, the marketplace could not get through 127, the figure. I think it traded down to a low of 127.06, and it just couldn't go. I basically took half my full position off at 08, and I squared everything at 12. My idea was I was going to resell a break of 127, the figure. So I wanted to see what the marketplace was going to do, and if the marketplace could not move much higher, I was going to resell the break of 127, the figure. I started thinking, I said, I really think that sterling yen, since it could not get above 201, and really the high on the day was only like 74, I'm going to go short sterling yen. The idea was if it would have stopped around 288. And I said, you know what, let me just move up to 296 because, marketplace is F around, and I just wanted, I didn't want my stop too tight, but I also didn't want to, really blow, more money than what I allocate to a trade. So I had to pare down a little bit on my trade and expand my stop a little bit. Here's my note. I squared that sterling dollar position, and I was not gonna resell it because I already went short sterling through sterling yen. So I was in my short sterling position, but against the yen, not against the U.S. dollar, because the U.S. dollar is also a dog, right now. Anyway, so I basically closed. I told everybody, 11:13 p.m. last evening, because it's now the 30th. At 12:24, and I told everybody to get out at will, take your profits at will. I basically closed this down on an average of around like 83. So let's look at good old dollar yen, and the critical prices for dollar yen are 157.21 and 157.99. Okay, there's quite a wide movement there, but we're really close towards this 21. So what these levels do for me is basically give me an idea of what the marketplace is telling me. What is it whispering in my ear? Because it's important for me as a trader to have these points that I developed so that I'm not pursuing a biased idea. Like I was a sterling yen bull. I mean, I thought, I was counting it going at 203 real fast, and it just wasn't happening, and the levels were telling me it wasn't happening. So I wasn't going to pursue something that wasn't happening like it was. I would much rather have been short sterling and make the 60, 70 pips on it than to still be long my sterling yen and now sitting at 199.75 going, oh, what the F just happened? I mean, it shouldn't be here. Because generally when trades are working and, you're on the right side of the market forces are pushing the trade in the direction that you're in. And, sure enough, they will help you move towards your profit levels and, you'll make money. But when the marketplace is not telling you that that's happening, don't pursue it as it is happening. So having biases is really the death of a trader. So again, 157.21 on the downside, 157.99. So, all right, dollar yen trades through 127. Okay, 157.20. It is 12.26. So 157.21. What would I do? Well, what I would do basically is I would most likely, since I'm an aggressive trader, I would sell. I put a 50-point stop on it. Not the best thing to do. I I'm always early. Guys that follow me in the room know, like, if I sell something or buy something, they can always get 20 points better than I can, because I'm a little bit long of a term trader. 50 points, aside from a really volatile market, gives you some room to think and to actually torture yourself a little bit when you're not, it doesn't immediately work. So break of like 20, 21, I would go short. Maybe I would, talk to you guys. I'd say sell half of what you normally do. Wait for a retrace. You could probably get a retrace to like 33, 35, 37, 40 even. Okay, and then you could sell your other half, and then your stop loss is much. It's buffered. It's not as deep as just going straight out selling your full boat at 20 and expecting the marketplace just to go. Now, when these levels, some of these levels do go, they really do go. And since these are micro levels, you're looking at 70, 80, 100 point movements. 100 point being really well. Usually 1R, you're looking for 1R back. So if you're risking 50, you're looking for 50, maybe a little bit more than 50. And you don't want to overstay your welcome. So we did the British pound, right? We're doing dollar yen right now. Did I do sterling? No, I didn't do the British pound. Did I? Did I do the British pound? No, I didn't. Yes, I did. Let's go to sterling yen. Here, sterling yen is right here. This is basically the sterling yen trade, all right? So sterling yen 199.57 is the lower boundary. 200.65 is the upper boundary. If you notice here, like where this level, this 57 level is very close to this congestion area right here, and the low here has been 61. Now, if this breaks, I would expect this thing to really go down a nice amount, because all the weight of all this up here is going to be like, people are going to be exiting this. They're going to start puking positions, and you could probably see sterling yen back down to the lows over here of 199, the figure. Now, here's the thing. Somebody once taught me that you really shouldn't target lows. You should really be looking for like the low days close to target, or to focus on the low days close to see what's happening at that point. A lot of people get greedy. Here's your low bar, but the close of the low bar is up here. All right, so the marketplace rejected this price, and basically, this was a strong reversal point, because we make a low, and all of a sudden we close up above this. It's a key reversal, or closing price reversal. That's a pretty strong movement. So that basically was saying that, okay, the market rejected this movement down, and this basically was really a classic Wyckoff spring. If you would have put, a line over here and said, okay, I'll buy that, would have stopped down here, I'd buy up here, would have stopped down there. Well, it was a really nice trade, and it really went very, very well. Doesn't always work that way. But anyway, so I'll leave you with these levels, micro and macro levels for these currencies that we discussed. Because it's so late, I think I did this one. I did dollar yen. I did sterling yen. And I'll leave you with that. So please, if you like what you see, like, subscribe. Don't forget to ring the bell. I'll be doing these, I'm going to attempt to do them every day for you guys, to put them out and to post basically what trades I've taken. And I document all my trades. They're all on Telegram. People follow me. People watch what I'm doing. Trading live, warts and all. Now, to be completely candid, there are some trades that I don't post. They're just my trades, because I deem them to be more risky than other trades. And, some of them don't work out. So, and I'm just glad I spare the room those, but, we have a good time in that room. So please, don't forget, subscribe, like, ring the bell. I'll see you guys in the next video. Cheers.